Hello and welcome. You have tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and today with me is Ankita Saxena. And viewers, this is the show where in the next 1 hour we're going to be highlighting all the buzzing counters in trade as of now, and what a smart recovery, Ankita, that we have seen from the day's lowest point, not just for Nifty as well as for Bank Nifty, because the private banks are really supportive in today's trading session. Just a while back, the volatility is once again to be kicking in, but as of now, Nifty Bank is down about 140 points. And if we talk about the Nifty 50, then 80 points of cut is what we are witnessing. Tata Motors is one such stock which is seeing no recovery from the day's lowest point, holding on to the cuts of almost 9% after no exciting EBIT guidance, as well as the outlook for the passenger vehicle and commercial vehicle segment was seen to be on the lower side. But if we talk about some of the other counters, then pharma majors are definitely doing well. Cipla is the top gainer in Nifty 50 today. But apart from that, let's have a look at Piramal Pharma as well, because this time the company has reported a great set of numbers, and that's how we are seeing the excitement on the share price as well. Stock holding strong around 5.5% of gain. And this time, if we see the earnings of Piramal Pharma, though they not just met the street estimates, the numbers were higher as well. And apart from that, the CDMO business, what the company guided like 3-4 quarters back that they're going to be doing well in that is seen to be flaring better. So let's understand more about the internals and the outlook from the management itself. We are being joined by Nandini Piramal, chairperson of Piramal Pharma. Hi Nandini, a very good afternoon and thank you so much for your time to ET Now. Firstly, let's talk about the margins then, because this time your margins were close to like 21%. But going ahead, what is the guidance on your margins and what will drive your margins in the times ahead? Can we expect to see 20% plus number for FY25?
So I think what we've seen with EBITDA growth, margin expansion has come as a result of stronger revenue growth. So we are a fixed cost business. Stronger revenues leads to operational scale. We've also spent a lot of time and effort on cost optimization and operational excellence. So along with these, I think we've seen that margin increase. For FY25, we're actually guiding an early teens absolute improvement in revenue and early teens margin is growth as well. So I think next year, that's what I can say for FY26. In the long term, the medium term, 3 to 5 years, I think we can see 22 to 25% EBITDA growth margins.
Right. Nandini, the CDMO, saw a growth of 29% on a year-on-year basis at around 1,649 crores odd. Can you share the growth outlook going forward for the CDMO business?
So we're expecting, I think, for PPL overall in early teens revenue growth. The CDMO business should grow a bit faster than that, whereas as well as India consumer products.
All right, and also Nandini, if we talk about your internals then the complex hospitals generic, that segment has actually seen a decline of 5% on a YY basis. Just wanted to understand that because of the pricing, we have seen a pressure in the quarter gone by. But going ahead, do you believe that there could be some reversal in this particular segment in terms of the positive side, and what is the overall outlook?
So this is a generics business. You will see some, price declines in that, and that's going to continue to see. We will see that. However, we're actually quite optimistic about the medium-term growth of the business. We're expanding capacities at our plant in Digwal, Telangana, as well as the Dahej, Gujarat, and that will give us the opportunities to play in the rest of world markets where we don't have as much of a presence. Additionally, we're also looking at launching new products under development. Those will be over the next 2 to 3 year time frame. So medium term, I'm actually quite optimistic about the business.
Right, but Nandini, what is the guidance on the net debt reduction? Well, we have seen your net debt to EBITDA improve from 5.6x, at the start of the financial year to 2.9x at the end of FY24. Where can we see this number headed?
So as you have rightly noted, we reduced our net debt from 5.6 times EBITDA to 2.9. Next year, as we see an absolute increase in EBITDA, we will look to bring down that net debt further, but I can't give you an exact number at the moment. But the direction is lower.
Okay, but the direction is on the lower side for the guidance. But Nandini, we understand that this is a difficult biotech funding environment, and what is all these companies are also highlighting, and they're also pointing out that maybe in the second half of FY25, where we can see this whole environment and the business dynamics improving for the industry. What's your sense on the industry growth outlook, and especially with respect to the US biotech funding?
Our expectation is, as we said, a mid-teens revenue growth. If the biotech industry improves, that would be an upside to our growth. We haven't factored that in yet because I think as of right now, it's too early to say.
Well, Nandini, you also spoke about the new product launch that, as you mentioned in your previous answer, but tell us about the product launch pipeline then for FY25.
So in CDMO business, actually this year, in the last FY24, we saw our on-patent business that comprises of about 50% of our overall business. For that's been a big shift for us because over last year it was 45%. And for the first time, our trajectory is like it becomes almost a majority of our business. So that's something that we're very excited about. As we go forward next year, we think in the CDMO business, the on-patent commercial business should increase, as well as our differentiated offerings and the sort of commercial products. So I think this is what excites us as what in the India consumer products, we've launched about 150 new products over the last 3 years. We're going to continue to launch new products. We're particularly excited about our new men's range, Bohem, and we see that as a very exciting market to play in.
All right, Nandini, thank you so much for joining us today on the show. And well, with that, viewers, let's begin with a countdown of all the stocks that are buzzing away in trade, either on the back of research or technicals. And on the technicals, we are joined by Aditya Agarwala, who's the head of research and investments, Invest4edu. And on our research side, we are being joined by Snehi and Gaurav. Hi, all of you. Welcome to the show. And let's begin with all the stocks that are buzzing away in trade. Shrishti, you've picked up Cipla for us. Clearly, the pharma pack is in focus today. Tell us what is powering Cipla today.
So Ankita, if we talk about Cipla, then the numbers just came on Friday during the second half of the markets, and the numbers were not that great because operationally the company did disappoint in the Q4 numbers. But apart from that, the management commentary was really on the positive side, and it did get a thumbs up from the brokerages as well, because just when the PC was on Friday, the company did guide for a good margin, better margin for FY25 versus FY24, and where they are targeting the margins to be in the range of 26%. And what they're also highlighting that the company is having a good pipeline. Apart from that, what they're saying that the US FDA compliance in the Goa side is actually due, and shortly the company is hopeful for a re-inspection for their important Goa facility. So if that goes through, then that could be a big trigger for Cipla. In terms of the margins, like I told you, 24.5 to 25.5 is the guidance, to be precise, for FY25. The company has 12 assets in peptides complex generic space to be launched over FY25 and 27, and they also continue to implement remediation measures at their Indore facility. They also have one biosimilar asset in the early stage of development. So keeping all of these factors in view, the brokerages were also sounding positive on Cipla, and not just Cipla. The move in Cipla has also got a good rebound in all the other pharma majors as well.
Absolutely, Shrishti, it has got a major rebound in other stocks as well. In fact, Nifty Pharma right now is the only sector that's trading in the green right now, with gains of over 1%. But moving on to another counter that's buzzing away in trade, and that's Tata Motors. Now, despite posting a good set of results, the street has not given it a thumbs up. In fact, it's trading with cuts of more than 8% right now. The company had a robust Q4 FY24 results. Now, the net profit more than tripled on a year-on-year basis, was welcomed by a section of the street, but were met with skepticism from others who questioned, if the demand momentum is likely to continue in Tata Motors. Stock fell nearly 10% at the open, of the trade. The company posted a staggering 222% year-on-year growth in consolidated net profits at 17,400 crores. Helped by improved operating leverage, favorable commodity prices and strong volume growth across various segments. Now, its revenues from operation increased 13% to 1.2 lakh crore rupees. And a slew of brokerage notes also came out with the mixed calls on the stock. Nomura on Tata Motors said that they're downgrading the stock to neutral from buy, and they've hiked the target price to 1,141 rupees. They feel that the performance has been steady, in fair zone right now. The passenger vehicles is likely to grow ahead of the industry growth, and the consumer vehicle segment growth is likely to moderate, and the JLR, could face a demand risk going ahead. Morgan Stanley has also downgraded the stock to equal weight from overweight and hiked the target price to 1,100. So clearly, a big news coming on the Tata Motors, but the stock is down and out more than 8% right now.
All right, then that's about Tata Motors, which is down in trade and no significant recovery. But Aditya, hi, very good afternoon and thank you so much for your time. Let's talk about the first counter that's on your list, and that is Astral. Talk to us. How is this stock looking on the technicals?
Hi, Srishti. Thanks for having the show. It's clearly in a strong uptrend, despite the fact that the markets have been wobbly and we are seeing bouts of profit taking in the markets. This is one stock which has been making higher highs, higher lows, and it has broken out from a trendline resistance in trade today as well. So overall, it looks like very strong on the charts. Srishti, a sustained trade above 2140 will propel the stock higher to levels of 2300. So I'm looking at a positional trade here again. On the downside, 2100 is a very strong support for the stock. So with the stop loss at 2100, I would like to initiate fresh long positions in Astral for a target of 2300 on the upside. If I plot technical indicators, especially the RSI also on the graph, it is showing me a continuation of the bullish momentum, because clearly RSI took support at the neutral level of 50, and from there it has breached the upper band, it's a 60. So overall looks very healthy, and I think there is more room on the upside. So one should definitely look at fresh long additions in the stock.
All right, coming to you, Snehi, you picked out an earnings candidate, BEML, and look at the movement on the stock. Sharp spike coming in the morning. It's trading with gains of over 12% right now.
Well, yes, absolutely. Very good numbers coming in from BEML, and stock is also reflecting how the street feels about these numbers. The company has reported an almost 63% year-on-year growth in consolidated PAT at 257 crore rupees roughly for the quarter ended March 2024. This was led by healthy operating numbers. Now, the revenue from operations grew 9% year-on-year to 1,514 crores almost. The company's EBITDA has also surged almost 30%, and this is on the back of an improvement in margins, because margins have also gone up to 24.5% from 20.7% on a year-on-year basis. The company's board has also recommended a final dividend of 15.5 rupees per equity share. So on the back of these strong numbers, at least stronger than what the street was anticipating, very good set of numbers coming in from BEML, and the stock is up almost 12.5% as we speak.
All right, that's about BEML. But apart from that, Gaurav, take us through the numbers coming in from Kalyan Jewellers.
Well, yes, we have got business update from Kalyan Jewellers. So as you know that Akshay Tritiya was there, and this was in the month of April last year. So what they have done actually is that they have actually compared the 40 days performance for this year as compared to the last year, and according to this, they have seen a strong trend coming up in the business. So what they have said is that they have seen strong footfall from existing as well as new customers in this year so far. Apart from that, they have also seen revenue growth, which was very strong across gold as well as studded segment. If we look at the numbers, revenue for the first 40 days, according to them, witnessed early double-digit same-store sales growth for the company. And apart from that, Kalyan Jewellers has also come up with 10 new showrooms and 7 Candor showrooms in India and across the globe, which has now taken the total count for Kalyan Jewellers to 270 stores. If you look at the stock now, it seems that the stock has corrected. It is down 2.5%, but all in all, it looks like a strong update coming up from Kalyan Jewellers, and definitely on back of this, keeping an eye on this stock.
All right, moving on, coming to you, Aditya. Britannia is what you've picked out for us. More and more techies are picking out stocks from the FMCG pack. In fact, the stock is trading today also with gains of more than 1.5%. Right after its Q4 results also, it gave a sharp spike of 9%. But what is the upside that you're seeing for Britannia there?
I think Ankita stock has legs all the way till 5400 on the upside. 5450 is what I'm eyeing. It was a very strong breakout last week on back of healthy volumes. In fact, I have not seen this kind of a volume in last 2 years for the stock. So after a gap of 2 years, we've seen this kind of a massive volume breakout. And after a couple of trading sessions of consolidation today, it looks like stock has resumed its uptrend. In fact, on Friday as well, it took support at a key support area, moving average, and from there it's moved upwards. So all in all, with the stock just below 5,000 or maybe with the stop at 5,000, I will initiate a fresh long in the stock and look for a target of 5450 to about 5500 on the stock. And plus, all the indicators are supporting the bullish view. So it looks like the move has just started and there is much more room on the upside.
All right, that's about Britannia. Looking for much more room on the upside. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back with more stocks in this edition.